Good morning and welcome back to Morning Markets from True Potential. Today we'll discuss asset market performance from yesterday and focus in on some of the UK data that we've had this morning. So just looking at equity markets yesterday, a bit weaker across the board really in terms of equity markets. Not surprising given how we have travelled over the past couple of weeks in terms of indices at or again reaching all-time highs. So a bit of profit taking yesterday, evident in Europe, also evident in the US. Not much differentiation in Europe in terms of small cap versus large. The US, a slight nuance to that, where we did see the Russell 2000, the small mid-cap index, underperforming broader markets. It was falling about 1.6% on the day, versus if we look at the S&P minus 60 basis points on the day. So a bit of a divergence between what we see from large cap and small mid cap in the US. I think it's also just worth commenting that we continue to move through results reporting for the first quarter, and that typically will introduce some volatility into the stock-specific names as we go through the period. Just wanted to highlight that volatility has fallen to low levels. You can see that in the chart, so it wouldn't be surprising to see that pick up a little bit as we move on through the reporting period. I think then just looking at other asset markets yesterday, worth commenting on currency markets. We touched on in the first quarter of 2021 where we saw dollar strength, different to what maybe had been expected at the start of the quarter. We've then seen through the month of April so far dollar weakness. That theme continued yesterday with the dollar falling about 0.5% across a basket of trading partners. Within that, noticeable the strength of sterling. So sterling was up 1.1% yesterday to close to the 140 level again. So quite a significant move there in sterling. No real reason behind it other than the dollar weakness that we've seen. I think the other markets to focus in on, just commodity markets. We've discussed the strength that we've seen in commodities as economic activity, economic momentum has continued to build. Again, we've looked at that in the case of oil. Yesterday, worth just noting, iron ore, a key component into the manufacturing of steel, that moved through back to a 10-year high, back to $180 a tonne. You can see that in the chart here, where we've come from back to 2011. And back to the levels that we saw then in terms of the iron ore price. Combination of factors there. Strong demand for steel coming out of China in particular, so iron ore, key raw material there. But also some supply disruption through the first quarter from Australia and also from Brazil supporting the price there as well. The other thing then just to dig into today and focus on is just a number of data points that we've had out of the UK. Just looking at the employment situation. So if we look at average earnings for February, up about 4.4% year on year. The employment report is more interesting, more mixed in the sense of what it's telling us. The unemployment rate itself was down to 4.9% from 5%, but a function of that is just the maths with the number of people exiting the labour market, which has arithmetically brought the employment rate down. But obviously people leaving the labour market is not a positive sign. I think the other thing really to focus in on here is that these numbers are very much backward looking. They're reporting on what has happened. If we consider some of the nearer term data points in the release and we look at vacancies, we look at some of the real time data around vacancies, we've certainly seen the vacancy rate pick up, and that is certainly supportive for future trends in terms of unemployment as we move through the course of this year. But as we've discussed, there are a number of competing forces here at work. One, we've got the role of the furlough scheme, how that changes as we move through this year, what that might mean for employment, and also what it means for the shape of the recovery that we're discussing in the context of the UK. So again, some things to watch from the report, but very much a backward-looking data point. I think also just looking at other economic indicators this morning, we had Germany producer prices indexes Inflation, a key hot topic for asset markets. Again, very much in line with the dynamics that we've seen. If we look at month on month, up about 0.9%, a slight increase from the previous reading. The year-on-year number, for the obvious reasons, that base effect is much stronger, up 3.7% year-on-year from the 1.9% year-on-year that we saw in February. So that evident change in inflation there, but not really that much on a sequential basis. Finally, today I just wanted to touch on cryptocurrencies and Bitcoin. Seen some volatility in that over the past couple of days. Trading over the weekend brought Bitcoin lower. It's now down about 11-12% from the peak that we saw last week, which coincided with the Coinbase IPO, which we discussed. It just highlights the volatility in that aspect that challenges some of these crypto assets at this point in time in terms of how they are utilised. Also, just worth noting, yesterday the Bank of England and the Treasury here in the UK announced the formation of a task force to really look at digital currency and the potential for the introduction of a Bank of England issued digital currencies and how that could potentially be used by households and businesses. I'll leave it there. If you haven't subscribed on the YouTube channel, please take the opportunity just to click now. Many thanks.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.